Please regards 865. Please regards 865. Thank you.
What's up, everybody? Welcome to a special Newark Liberty Airport edition of Office Hours. What a day, my friends. What is up? It's not medical advice, but it is not medical advice. Yeah, boy. What's up, dingus pingus?
Yeah, we're gonna check this for all passengers trying to left TV to
Oh yeah. Dude, it's chill. Just live streaming at the what else is good?
Thank you.
Cheers, everybody. GME beast mode, indeed. GME is in beast mode. This is it, y'all. This is it. Quite the day. Seriously, how about that? Top gainer across the entire market today was GameStop. Look at us. Where's the meme? Look at us. Paul Rudd. Look at us. Yeah, I love the news reports today, right? The one that's just like, this is why. This is why. For sure. I like the one that's like, what was it? What was my meme today? This one. Tariffs are the reason everything is going down. GME is the #1 gainer. But that's also bad. And because tariffs, just wait. Where's Masta? Where is he? This. Yeah. What's up, Cole? Good day to you, sir. Oh yeah. Yeah, I mean, I think with XRT, man, I think we're just getting started with XRT. I was talking to somebody today who's built asked to remain anonymous, but has built a program for calculating when we might be expecting some of the FTD stuff or the cat stuff that Region Formal and such were talking about that was happening back in February. And between the 18th and the 22nd, we should be seeing something responsible for a lot of those big XRT FTDs. I mean, this was small, right? This is likely small, a small percentage of whatever. Richard also thinks maybe we start seeing some stuff starting on Tuesday. I think also between the 18th and the 22nd. We also have, I was talking to Metro Ballin, right? I mentioned Metro Ballin a couple times this week. Metro Ballin talking about swaps, Chewy swaps in particular. So it turns out, I found out that the data that I was working on from user Matsy was actually Metro Ballin's data from back that summer that he just didn't update. So Metro Ballin actually hit me up and took me through some of that as well. And basically said, these swaps that I was looking at coming due the 14th on GameStop, those are closed. Those were closed on the 23rd of October. But there are a whole bunch of Chewy swaps that are open thereafter, right? So that between the 15th and the 22nd, So let me see if I can pull this up actually for us. Let's see if I can find this. Let's book going. I can't see anybody's name. I get this weird new like Twitter error.
May I have attention please at this time with on the flight and portion 3 to Frankfurt. Are you ready all passengers in group 1? Group 1, please proceed to gate B63 for boarding. Kindly have your passport open to the picture page for final inspection. Thank you for choosing Lufthansa. Have a good journey into Frankfurt.
Is that not like his handle or something? Did he disappear from Twitter? Oh, I see. Okay. What the heck, did I hallucinate this? What? This is very strange. When this is
Ladies and gentlemen, may I have your attention please? Aircraft flight 063 prepared and its final boarding process. This is the last call before doors close. You have to open passengers immediately.
here. I don't know why I couldn't find that.
At this time, Lufthansa flight and 3 to Frankfurt and dividing all passengers into 1 and 2.
Yeah, I want to find this image for you guys.
I
I don't have the actual file. Metropolitan said he would send me his whole file. So I'll have that soon. I want to find this screenshot. It's here applied.
This was the last final going for the passenger Adnan Janice. Please proceed to immediately as the flight is ready for departure.
Oh, here it is. So okay, so what are we looking at here? So what we can see, let's see, can we make this a little bit bigger? Should be able to do that. Yes. I think I should be able to see that. Yeah. So what are we looking at here? So anywhere you see action type newt, it means that I gather that this means that a swap was opened. And it's going to give you the event timestamp, I guess, and it'll tell you when it was opened. Where you see modified, it means that something's been done to the swap to change how it looks. Okay, so fourth. Yeah, so we had some stuff actually on the second. So we had some Chewy swaps on the second, or the first and the second just go off for 2 million. But let's see here, there was a modification for some. There is still some that is coming due. 10 million in notional value of Chewy swaps that were opened. They were modified. So those are probably, these are earlier ones, I think. Maybe these ones from the 13th of 2025. These got rolled forward. So these are on the newer side. They've been rolled forward to the 14th. So they're bigger and they were rolled forward, I think. So those haven't expired yet. Let's see. There are a bunch opened on the 15th, where we have a lot of notional value here. The big one is this one. So one of these, which goes all the way back. So these are swaps on Chewy that go back all the way to 2021, January of 2021. These are expiring on the 16th. They have a notional value of 26 million. And then if we go all the way down here, on the 17th, we have another set that was modified from during Kitty's return for 100 million. So we have some really big Chewy swaps. And why is this interesting? Well, this is interesting to us because, right, Metropolitan actually believes that a big part of what caused our upward price action back at the end of last year had to do with these Chewy swaps, and that this was something very strongly suggested by Roaring Kitty when all of this had to do with the fact that, okay, a lot of this reciprocal price action is being caused by things that have to do with Chewy. So very interesting. If that's the case, then we could see a number of catalysts all coming together around the 17th or the 18th, and maybe spilling over into the following week, along with this suggestion by Roaring Kitty that we're looking at, right, the idea that 420, right, so 69 to 420. So January 9th, fast forward to 420. Maybe that's when he's going to poke his head back out of the hole, right? Kitty's going to wake up from his wintertime slumber, come pay us a visit. Very interestingly, that's also Easter this year on both the Catholic and Orthodox calendars. Fun time there, right? So yeah, we have some catalysts coming together. We have some suggestions that we've got. We've got XRT delivery stuff coming due. We've got cat error stuff coming due. We've got maybe swaps coming due. We've got a whole bunch of stuff coming due around in that range. So right around, I should say, April OPEX. So just before, during, and just after. So interesting to comb through a bit of this and try to make more sense of it in the weeks to come. But that seems to be what a lot of different things are pointing to. Let's take a look. What's up, Manda Galaxy? Good to see you. What's up, Gamma Chat? Magic ID number to start selling calls again. Well, I always sell calls. I always sell calls, but when IV gets high, I walk in my time frames. So if we get to a certain point where it gets super high, maybe I'll play with the strike a bit, but when it gets really high, I'll walk it in. So I'll sell like weeklies, or I'll do like 2 weeks or something like that. When IV gets lower, then I'll go, a month or so out. And typically that has to do with, I'm trying to figure out, right? I'm also trying to get a sense of how IV is actually working in these different cycles. We're going into an upcycle right now. This is what I talked about. I've been talking about this week. I talked about this last week. We're going into a macro upcycle, right? Richard's been talking about this too. And we've been talking about it to each other. We're going into a big macro upcycle that's starting basically now, and it's probably culminating in June, after which we're probably July, August, we cool off a bit. Would not be surprised if we saw another offering, either some kind of at the market or another convertible note offering in June, probably mid-June, something like that. So because I don't know, right, what maybe some of these catalysts are, I kind of walk some of this stuff in with a shorter time horizon. I can feel a bit more confident, right? Because I can say, well, do I know that we're not going to surpass 30 in a month? No, I don't know that. But in a week, I feel pretty confident that that's not going to happen in a week. And if it does, my gosh, IV is going to go so nuts if we move that hard in a week. You can roll them if you want and then collect crazy IV premiums. Like that happened last week, right? If you were in covered calls last week and you had that crazy earnings jump, like, calls out of the money calls like 5x, right? So calls expiring that Friday on Wednesday, like 5x. The 30s went from like 20 cents on Monday or like 25 cents on Monday. On Wednesday they were over $1. So they 4x, not 5x, but they were over $1. So if you just, I don't know, even if you didn't want to do the same contract, if you just rolled those at that point, the ones for the following week were like 150. I think the ones for this week for 4-4 were like 150 last Wednesday. So like when you have a huge IV swing like that, you can, and it happens in such a short period of time, you can just roll them if you want. But even if you didn't, it was fine. It came back down. You didn't get that weekly close. So that's what I'm doing right now, right? Cover calls targeting. So like I open 30s today, really toward the end of the day for next week. That's it. So 1 week, right? 1 week, and then midweek I'll decide what I want to do. But this way it's like, all right, put a little more cash in the bank, because then if we dip down, you've got that extra cash. Scoop it up on some of these dips. If next week's not the week that we start ripping, right? So that's what I do there. Good day to have a good day. Amen. Yeah, we're probably looking at some of that. We're probably looking at some of that. And we'll shoot through 25. We're not going to chill at the new floor, right? We will shoot up through it, and we only test the new floor on the other side, right? So we'll come back down in July or August again, and we'll come back to 25 or whatever. Yeah. Probably. It's coming. He's waiting to bounce. Good question, Cole. I think today definitely had the look of a VWAP order. I was also talking about this to Richard today. Looked like, I posted about this. This looks like textbook VWAP. So let's bump down to 1 minute. Come on. All right, there we go. So see this, right, where we just like ride the whole day, like even starting pre-market. So pre-market, right? I said this. I think I said this when I posted. Maybe I didn't tweet about this, but I posted this tweet where like, no, I talked about this in the video, right? In the video today, where I was looking at shares to borrow, and actually, let's see what they look like now, right? And I noticed actually this is what it looked like. Okay, this is what it looked like right pre-market, and I think I mentioned in the video that hey, it looks like what we're looking at now is actually shorting. That this is meant to look like the price is actually selling off pre-market. This is meant to look like we are trading down with the market, but that's not the case. Let's see what they look like now, just because I'm curious. Zoom in a bit here. Let's see. Wow. Okay. So by 11, we actually got down to 800,000. That's a new short-term low. That's a new short-term low. Okay. 800,000. We haven't seen 800,000 shares available to borrow since like January 11th, 12th, something like that. So liquidity is drying up. Short liquidity is drying up. But if we look at this pattern, this looks like somebody basically here when the market was trading down, when we got to cover our FTDs. Let's do it now while we're actually at this kind of fair price, right? So walk it down, walk it down, walk it down, walk it down. And now let's just punch in the VWAP order. And what do we see? We just ride the averages, right? And so we get some shorting to try to destabilize us from that, but then it just comes right back up. And we ride and we ride and we ride. It's just a straight line up, right? We go like this. It's just a straight diagonal line. You see a straight diagonal line like this throughout the whole day. That's a VWAP order. So somebody punched that in, which meant somebody had to acquire a significant amount of shares, probably in order to cover FTDs. Probably like could be XRT, could be IWM FTDs.
All the groups want to say, please keep your voting cards.
What they want to avoid, right, is they want to avoid spiking IV, right? So they could just come in. They could just come in and pick up the share. So it's probably a market maker, right? Because why wouldn't they just put in a big share block? Like if it was an institution or something, why wouldn't they just put in a big block order and then a market maker can internalize it? Like, the equities market maker could go ahead and internalize it, could just go through a dark pool. Why do they have to go through VWAP? They have to go through VWAP because it's probably a market maker. It's probably somebody who's been internalizing trades, who's been doing strategic fails to deliver with an ETF. And they just never settled the trade. And now they have to actually go get the shares because they can't do all this rehypothecation internalization anymore. So they come out, they punch in this big VWAP order, and they pick up millions. Because that's what this is. They picked up millions. Now, a lot of this is going to be, why do they want to do that? Because if they punch it in right away, it's going to be a huge spike. You're going to draw in, people are going to euphoria buy options. That's going to mess with the options market maker. There is going to be hedging that's going to send that up. You can trigger a gamma squeeze on top of this. And then the following week, the price just gets stuck up in this new bracket, and maybe that's going to mess with your liquidity otherwise. So what you want to do is you want to acquire those shares at a pace that's going to build up as little volatility as possible. And this still built up some serious volatility in the stock, right? This still built up serious volatility in GameStop to have even this kind of very basic, very gradual line. So yeah, there are proprietary algorithms out there. I think you can even, depending on like your tier of interactive brokers, you can just get you can just do a VWAP algorithm that'll go and acquire a certain number of shares for you, and it'll just say, okay, how can I stay basically within a few percent, and you can set the percent within the volume weighted average price that you want, and it'll try to get you the best price across the full day without basically causing an event that would bring in excess buying that would then cause you to lose more money as you try to actually accumulate your position. So that's what was going on there. That was probably was a market maker that needed to close out at FTDs. That's what that was. Sam's got the idea here. Michael Amadio, interesting. I don't know who this is. Let's see. He kind of does. Let's see. How do we make his face bigger?
Once again, for all your travel, you will concentrate and expose road trip to Frankfurt. We are now going from groups 1 through 6, 1, 2, 3, 4, 5, and 6 to get P63. Kindly have your passport open to the picture page for final inspection. Thank you for choosing
this one. Maybe a bit more. This one probably the most. Yeah. What do you think, Chad? How do you mean, Sam? Whoa, what's up? Thanks, Dribble. That's a weird thing for me to say. Thank you, Dribble, but that is your name. So, hey, thank you. I appreciate that, man. I try to do my best. Like, I have some epistemic models for how I think TA works and how all this works. I've learned a lot from a lot of folks. I'm very, very fortunate to have been informed by some people who are far more knowledgeable than I am on the subject. And I always admit that I have no certain knowledge of how any of this actually works. So I think that, and the other thing too is I try to trade on my own, right? I try to trade on my own stuff. I try to say, okay, well, what happens, right? I trade experimentally too. I try not to talk about that too much, right? Because I don't want people, like, I understand, okay, I have a YouTube channel, all that stuff. I try not to have people chase my trades. I'll tell you about the stuff that I use for bread and butter because that's time tested, that works. But yeah, sometimes I'll try stuff out. I'll try trading on this indicator or that one. But, I realize, hey, this kind of doesn't work. This kind of doesn't work. Okay. So, that keeps me grounded that I just don't, I definitely don't know everything. I'll say that. Cheers, man. It's actually not a haircut. I just it gets long,
May I
and
have
then
the purpose by
when it gets long, I just I part it in the middle so that it stays on my face, because otherwise it just like falls over my eye. So
Thank you.
I will be getting a haircut soon. In case you can tell, it is very long. But yeah. Yeah, no, dude. I appreciate the compliment, but I'm not about to think I'm the cat's pajamas. Nice. Nice. If you want to make me a song, I'll listen to it first. No promises, but if you want to make me an intro song, does that have to be the? Does it have to be I am a genius evil puppet and also a financial elite super winner? Does that have to be the name of the song? Could that not be the name of the song? Oh, what's up? Yo, it is. Bro, EWR is off the chain. Dude, you can buy a Bud Light here for like $11 or $13. It's amazing. That's high level. Oh, indeed. Indeed. Probably going to start to ramp up. Honestly, IV is probably going to start to ramp up. I'll mention there will have been a lot of selling. In fact, we can tell if we hop over today's volume, we can see the volume. We can see new alignment. But let's see. For next week, what do we have? Let's make this bigger. Yeah, so this guy got fucked. I was happy to see this, right? I mean, don't get me wrong. Like, hopefully this was like a hedge on a trade, but right, there was like one dude who came in with over 4,000 long puts at 18, and I was like, he doesn't know about the 2x notional asset value floor. That's not going to work out for him. So hopefully that was just somebody being like an overconfident bear, like this stock is dog shit. It's a failing retail, blah, 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 brick and mortar, blah, 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 blah. So hopefully it was somebody like that, so I can feel okay with them getting blown out of their position. I was not upset to see those not close in the money. Probably lost a serious amount. Well, IV is up, so they may not be that far down, actually. Let's see. This guy entered yesterday when this guy entered. Oh wow, we're up, but they're actually. Let's see. He entered when the price was 10, and now it's. This guy's actually up. This guy's actually up. Yep. IV ran so much. This dude is actually up. So, hey, you know what? That's the thing. When we're talking about volatility, man. Sometimes, like, you can be, like, you have to remember when you go long a put, you're also long volatility. So, if you go OTM, I think that was actually the case, like, back in the sneeze, right? Like, if you opened, like, far out of the money long puts before it spiked up, like you could have been like 20x your position just on how crazy GME volatility went up. So this guy's actually up 30% on that long put trade, but he's got like a day or two to exit this position before it does not go his way, and he did not exit it today. So good luck, dog. I hope you traded that because you're long volatility. If it comes down and volatility doesn't come down too low, we'll see. We will see. But let's see what other contracts were doing things today.
Jet Fresh to get me 63 please.
Call volume mostly, I guess 32s. 32s were mostly sold. Yeah, so 32s we had 1.16 thousand in the bid. So some shorting there. A little bit at 31. 30s, what do we get? Mostly at the ask. Ask. Nothing at the bid. About 17th. 26 fives, mostly at the bid, but like 100. Yeah, volume. 30s here. Makes sense. Mostly at the ask, so not actually a ton of call selling, to tell you the truth. Not a lot of selling here. So bit split, but actually mostly in the short term. In the near term, skewed toward trades at the bid. So not a lot of people were selling this volatility today, from the looks of it. Oh, dude, same. Yeah. Well, I suppose the key to today's tweet, right? Because he had this tweet about I can't wait to buy an iPhone for $10,000, a US made iPhone for $10,000. I think that's contingent on whatever you think his iPhone tweets meant last year, right? Where he was like, I predict the next iPhone will be called iPhone 16. And then he goes, called it. So what did he really mean by that? Did that actually have anything to do with the iPhone? You know, what's the real message behind there? So if we actually know, if anybody has any insight as to what the iPhone tweets actually meant, then this probably has something to do with that. Somebody suggested he could have sold his Apple position and now has a bunch of cash in his margin account to maybe buy more GME. Don't know. I don't know. This feels like an inside joke that I'm not a part of. What's up to Swag? Good to see you, my friend. Happy Friday. Cheers. Guido's here too. What's up, Guido? Do I think today was a margin call?
Security B63, please.
That's a good question. Usually, well, this may have been to prevent a margin call. This may have been like, I think this had to do with settlement, right? So this was a VWAP order. This wasn't like somebody took control of a position and just like forced an exit. Because you'll see, like with smaller institutions, when they get liquidated, when they get forced liquidated, the position just gets, it's just out, right? And that's when you see it. It'll just go like pop. It'll just shoot up, and it's just like you will close the position now. This is how that goes. So this didn't quite look like that. This looked like, XRT settlement stuff like we saw back at the end of right where around the time when XRT went on Reg Show, around the 26th. So actually, this was before December OPEX. So if you remember December OPEX of last year, we got go back and watch my videos. Actually, from that we talked about that. Even the live stream, we talked about that. So that would have been the live stream on the 21st. If you go back and watch the live stream on the 21st, we talked about this. This happened exactly then, where it was likely, and we actually saw XRT go on Reg Show after. So that probably had to do with GME FTDs then. And my thoughts on the cat error C plus 35. So I don't know to what extent, right? Excuse me. Like, region formal stuff is really good because it tells you that the cat errors do have something to do with settlement, right? That within that period, there's a major settlement event and GME is somehow involved because GME will spike within that range. But it's a statistical lens, right? And then he says, okay, like in this window, there's a spike up to a peak value of some large percentage somewhere in there. It's like, well, okay, are they actually look like, we know T plus 35 matters, we know C plus 35 matters, but it's not like the actual deadline, like they don't wait necessarily until the deadline. It's a deadline. They can do stuff before that. There's also this other stuff where, they can do stuff with the authorized participant. There can be like this T plus 6 in front of it. So it's kind of tough, I guess, because they added this T plus 6 thing in with how they interact with the authorized participant. That changes how that's actually getting processed. But this is, I think, why. Well, Richard also proposed something might start to happen on April 8th, right? If there are a lot of FTDs, it might take them a number of days in order to clear those. So something might start on the 18th. And a week after that, right, it's going to be right the 14th, 15th. We're going to start running into those swaps. So they might want to start covering this stuff. They might want to start closing out these FTDs before they get into the weeds with that, because it may be too late after that. Those are my initial thoughts. That's pretty cool. Yeah, if you know how to trade volatility, man, you can just hedge yourself. You can hedge yourself completely from moves in the underlying and just trade volatility. That's what the convertible bond arbitrage is about. That's all volatility. Yeah, let's see. What was RK's 330 tweet? Let's take a look here. Scroll back. Once upon a time. Oh, guys, Kathy Wood. Remember Kathy Wood? This is not loading. Anyway, what is on the 330-21?
Not easy, right? You look at it, it's small, it's small, it's small, yeah. They have a computer, right? They take you all right there, right?
It could be. I'm not sure. Because I'm not sure about, right, because like we look back at the fall and we see, RK making these tweets about, Trump is the shit, and like everybody took that as like, oh, that's a signal that we're going to start going up, right? So I'm not so sure the degree to which, or the thing about the mass, right? I'm not so sure the thing about the degree to which stuff that seems it's a commentary on some sort of political move is actually about something that's going on behind the scenes with GameStop. So because he, why say iPhone? Why not say anything else? And the thing is, he has made other tweets about iPhone. So what were his other tweets about iPhones, right? What was really symbolized in the earlier tweets about iPhones is the point. I'm not sure what you mean by like greatest probability of taking off. I'm not sure what you mean by taking off. Like if GameStop moves in May or June, they're both going to appreciate. So I don't know what you mean by taking off. It's possible that it is just a coincidence that RC needs to buy 7.41 million more shares after his recent purchase to bring his ownership to 10%. Is he pointing out something about the swap? I don't know. Paul Branham has been writing about that. If you got to know Paul Branham's Twitter page, he's been talking about that. He seems to think that there's a major exchange of shares that are occurring in dark pools, that maybe there's this specific number, the 741, may refer to a certain number of shares, possibly Cohen's like first purchase going back to 2021, that's passing back and forth in the dark pools in these 5,000K blocks. So part of the idea there that he's pointed to is that, why did Roaring Kitty buy his groups of calls last year? Why did he buy that in May and April? Why did he buy those in 5,000 call blocks? What did that actually have to? Did that actually have to do with acknowledging the fact that there were these 5,000 blocks of shares that are constantly going back and forth in the dark pool? And he made some calculation that seemed to suggest that that came to 7.41 million and had to do with the total number of shares that Ryan Cohen had previously bought before he bought that number of shares in December or something like that took him up to 9,001,000. Yeah.
Yes, in this airport and JFK too. They hate. I'm a little bit hesitant to speak about it.
Yeah, this was the other thing. This is the other thing I've been talking about this week. Guido makes a good point here. Part of the idea, right? We had visited this idea of Bitcoin. And if we go look at the Bitcoin chart, like, I'm not going to lie, like, I've been talking about this for several months now. BTC doesn't necessarily look like a good pickup right now. If we bounce out to the 1 week, the Bitcoin chart is not stupendous. I mean, it held up pretty well. I mean, it didn't decline with the market today, which is very interesting.
This message for customers.
So, the thing is, number one, I don't necessarily know. I don't have as intimate a familiarity with price action surrounding Bitcoin. But it's not as weak, let's say. It doesn't look as weak as SPY. But what we see here is it still doesn't look especially strong. This was good. I mean, it was actually really good to see this week, like Bitcoin kind of just stay exactly where it is while SPY is going down. In fact, it's held its position, right, end of March. So we'll see it. I mean, does this mean a Bitcoin sell-off is coming? I don't know. It doesn't look as bad as SPY. It does look like back here, actually, in 2022, we did something similar. I pointed this out, right? So we had a much bigger kind of sell-off here. We still haven't super capitulated. You guys can see this, right? If we're looking at Roaring Kitty's, if we look at a weekly version of his price momentum oscillator, right? So cross above, cross down, and then Bitcoin finally starts dumping when we get the 55 going down. Yeah. We kind of dipped below this, started to do that. Do we have the thing is the 55 is staying in place, so it's kind of stabilized. It does look like it's going to curl down. But if we get a wave of buying in here, kind of off of the, what would this be, the 50-week moving average, then it's very possible that we end up moving back to the upside here. We could kind of cross back to the upside. We're decently above the zero line, so there is possibility there. It doesn't look as bad as SPY. But with that being said, this is the opportunity of a decade here, I think, coming up with SPY and coming up with equities in general, because SPY looks terrible. SPY looks exactly like it does here at the beginning of the bear market, right? We have the 55. The 55 has already started curling down. What I think is going to happen is we're not going to bottom out until essentially, right, we need to get a zero line cross. We are far from a zero line cross here with respect to 55 blue. So we're going to cross down here, cross down here. I definitely do not see us pulling up without a test of the 200-week moving average. We might stutter a little bit once we actually hit the highs of January 22 as a support, since that was a resistance on the way down. And then we had a little stutter here. So, I mean, I honestly, like, I would rather see at this point, right? I think I would rather Ryan Cohen just kind of hold on to the cash and then let this bottom out. But I'm saying that because I have insight. Like, I've been looking at equities for a while, and I don't know the crypto market well enough. Maybe Ryan Cohen knows something I don't. In fact, he knows a lot of things I don't, especially in the area of investing. So this is not necessarily me to be like, this is not me being a Bitcoin naysayer. This is not me saying, oh, there's no way he acquires Bitcoin. I genuinely have no idea, and I don't know price patterns, and I don't know what's going on with Bitcoin to the same extent. So could that end up being like a really important move? Sure, but it also looks like, maybe in 6 months we're going to have a hell of an opportunity in terms of equities, to target some distressed assets and just pick those up on cheap. And then as SPY recovers, right, so we'll weather the storm, right, kind of like, just kind of cruise through this, get an upcycle, right, get an upcycle into the summer, come down a bit. But then when SPY is bottoming out and then it's ready to come back up, GME just goes on and sails with it, also after acquiring more capital resources, right? So I'm very happy to see the company just kind of sit on this cash, wait for the price up to ensue, ride some of these cycles, and then put that cash in something. Just timing the market as timing the market by targeting valued companies that become undervalued. Just standard value investing. But maybe sprinkle a little Bitcoin in there too. I don't know, man. Yeah, maybe Siri becomes undervalued now that it's merged with Liberty Media. Well, maybe some of these memes, right? Like maybe the Liberty Media merger was a suggestion by Roaring Kitty or something. Or maybe Unity is about to be like super sold off because Unity is now selling off. Maybe he's like talking to Ryan Cohen several years down the road, like, what about this? What about this? What about this? Maybe you want to pick this up. I don't know. Dribble Throttle Wars says, here's my song. Where's my song, dog? Am I missing something? Can't see any more comments. I have comments now. Oh, it's a link to my YouTube. No, you can't. You can't post links. DM me. DM me on X-Man. Or is it under your account? I can follow your account. I can't find your account. You don't come up. So just DM me with it, I guess. Oh, here it is. I don't know what this is. Oh, this is. video is a little off-putting. All right, folks. Well, I guess we'll do a vote on it. Okay. Okay. Yeah, man. I'm probably gonna pass on the video, but I appreciate. There's something there to appreciate. I'll say that. Yeah, that's cursed. That's from like the autistic part of like you or like TikTok hell, something like that. You know, like you just run that on repeat for like 10 hours and just be like, all right, Johnny's gonna pass. Yeah. It's your style, man. It's your style. Like, you know. But I appreciate the compliments and I appreciate the offer anyway. Bud Light, dude. Crisp and refreshing beer for the crispest and refreshest of dudes.
You know, I took the Uber from the train station in Philly today. This guy, Ahmed, he told me he wants to go to Brazil, but his wife.
What's up, Canada Hill?
Yeah.
I know why.
I told him it sounds like pretty rough. He said, yeah, that's why. Yeah, his wife doesn't want him to go.
I don't like it.
I feel like we're losing the thread here. I don't know what's happening. How are you guys doing trade-wise? You guys have questions? We haven't done too much trading recently. Done a lot of forecasting, done a lot of charts. Yeah, it's great. We talk about it every day. We reach a lot of the same conclusions by looking at different metrics, which is super helpful. He's great.
I think maybe the people they hire.
Can you move up versus the market Monday? Do you think it will encourage other people to buy in GME? It might. It might. If we can sustain that, that's definitely going to stand out. Like everybody's stuff is blood red. The GME is going up. Listen, guys. Like, I'll tell you, it's hard, right? It's hard because I reached out to a bunch. Like last Friday, I saw what was going down. Like I saw what just happened with the convertible bond arbitrage deal. And I was just like, oh my gosh, this is about to price up really hard. Like, I know we got coming down the horn. We're going into a macro cycle. And also, maybe we're going to dump. Like, April OPEX is super bearish. How many times? I just like, you know, in the videos where it's like, okay, let's do our Monday thing. Pop over here. Let's go look at the options on SPY. And it's definitely going down. Like, I'm pretty sure one day I didn't even do any analysis. I was like, it's just going down. Like, it will. This between now and the 17th, it's gonna go down, dude. So I tried to, you know, you get in touch with family members. You're just like, listen, I'm not trying to scare you, but on Monday, if you see GameStop at this price, maybe you should consider buying. And you know, like most people, right? Most people are very risk averse, and that's good, right? Because I was not, and for the first few years of investing and such, like I did not make money. So I understand why people are risk averse. And I've got less than a year of not losing money under my belt, even though I've made back all of the money that I've lost. It doesn't exactly instill confidence, and there are narratives out there about what GME is, and people are just gun shy, and then they don't go like, oh, maybe I should have done something about that until it's too late, and their positions just sold off by 12% in 2 days. That's what happens. You can try your best, but it might. Well, awesome, man. Great to meet you, Johnny. Definitely appreciate your dedication. We got more coming, right? Gonna see what we're gonna see. It's gonna be an exciting couple of weeks here. Yeah, that's definitely something to look for come Monday. We will see. Right, so it has to go to 0, right? So XRT FTDs have to go to 0. But let's see, yeah. So when did XRT first go on? Actually, yeah, that was the other thing actually about XRT that this gentleman who built this GitHub program. You have what the threshold security list you have to do is, so first off, you have to have 5 consecutive days where you have more than 10,000 fails that aren't cleared on a particular product that's called, right, so security. Then it goes on the threshold security list. With the threshold security list, you have a rolling 13 days whenever you FTD it. So whenever you FTD it, you have to close out that FTD within 13 days. But I think you can internalize that, right? So you can go like borrow that. You can just double it up, and you can go to another 35 days from somewhere else, and then have issues there. But then you run out of time, right? So I think from the first day where there were those massive numbers of cat errors, I think on the 26th, that more or less lines up also with mid-April. So that lines up with the week of April OPEX. The week of April OPEX might have a lot of stuff happen. Or maybe, right? See, this is the other thing. It's like it could be that we see a lot of upside there, or it could be that we have to wait until the other side of that in order to see the upside kind of released. I'm not sure. And that's something for me to, I think about too over the weekend and going into next week. If the price is $365, that would be cool. But I don't know if we're going to get that high yet. I think that's, to tell you the truth, I don't think that is the strategy that Ryan Cohen is going with. So what I think will happen, right, is, so okay, the thing about MOAS, right, and this is the thing I've been mentioning a lot of times people have asked questions about it. If you just have one moment, right, you have one big explosive moment where it goes up, you actually cut off how high things can go. Right? You cut off how high things can go because, okay, you can get some big euphoria, you can get some big ups, but if it gets too volatile and it gets too high too quickly, you don't have moments where new buyers can come. And you also have old buyers exiting at lower price levels. It's better to go from, let's say, $10 to $100 over the course of a year than it is over the course of a day. Because when do you get out? This is the thing. It's like you talk to people who have the idea that like swing trading is easy. It's like, how do you get out? You have to pick a price. That's where people succumb to greed all the time, is they don't pick a price. That's why price targets matter. Because you're not gonna know. Like, this is the thing. You're like, well, I'll just be there and I'll see how high it goes, and then I'll know. I'll just know. You won't. like, okay, if you get really good at recognizing patterns, maybe you can read the patterns, but most people aren't actually that good at that. They don't know what it's like. It's very difficult to recognize what that shape is. So what do? You have to pick a price, and you have to be okay with it. So like that's actually why cover call works, because I use that. I sort of pick a price, and I say, okay, for the next 2 weeks, the price goes from where it is right now to $30, like on a piece. That's why I do that, and then I'll sell cash secured puts. But the nice thing is, right, it'll come back down for a little bit. I can re-enter. So you make more money the longer you can draw this out. And what it seems to me that Ryan Cohen is selling major institutions, because that's what he's really doing here. Okay, he's getting institutions to squeeze other institutions. Okay, I wish. Do I have like a drawing pad here? Let me pull up. Richard always uses MS Paint.
Tomorrow I got a concert and a party.
Nice. I didn't say stuff.
The mouse here. We'll draw some MS Paint. So it'll work something like this. You guys see this? Yeah, Microsoft Paint. All right, so it's going to look something like this. There. So let's make it a little thicker here. So, all right. So let me sketch this. So you've got like what a certain number of buyers here, right? And you say, okay, let's say you have what 1,000. Let's say you have 1,000 shares, huh? Okay. And you have assets that are worth, 100. Okay. So then you go to this group over here and you say, hey, like, we'll give you 20 shares of equity, and that's going to take our total up to 120. To this, but with this 20, we're going to get a capital infusion that allows us to go to, we're going to double this. We're going to go to, we can double our asset size. So now our asset size is here. So by diluting, let's say 20, actually, 20 is easier. Let's say from 10 to 20. So you diluted the share numbers by, what is this? 5%? 5%. No, 2%. You diluted this by 2%. But you doubled your asset value. So for everybody that had those 1,000 shares, right, you reduced their holding of the assets, right? So they now own, everybody that owns, what would it be, 100 shares, now owns 1.9 assets. Okay. Previously, they owned 1 when it was 10. Right. So this trade was they got 20 shares, but they moved assets from 10 to 20. So they went from owning 1 share of the assets apiece to now owning 1.9. Okay. So by doing so, right, they increased. These people came in with equity. They put equity in. It allowed the company to increase its total assets by 100%. Okay. And by doing so, it increased what these people had. But these people coming in, obviously, they don't have a certain amount of money. So, okay, you could just say, right, if you're these original people, You could just go ahead and say, okay, I'm going to exit here because my investment just increased by 90%, right? The value of my investment just increased by 90%. That's a crazy good trade. I'm out. But you say, wait, the company says, wait. How did they incentivize these people to come in and basically just instantly take a loss on their buy, right? Because they had all of their money was used to buy 10 of this. So they now each own a significantly lesser portion now they own 1.9. Whereas before, all of their money was 20, right? So they've taken a huge loss. They've taken like a 90% loss, greater than a 90% loss in their investment. Well, how did you incentivize them to come in? Because you say, wait a second, we're going to get another group of people. We're going to give them 20 shares. And they're going to come in. And they're going to double this. And so now this is not going to be 20. This is going to be 40. So now the original people, you're going to double what they have. So now they're going to dilute a little bit more. So they're going to go to something like, 3.7 something. Okay. And so you keep doing this, and you say, we're going to keep doing this. And so you keep getting another group, and you keep getting another group. And as you do it, the previous group is going to keep having their asset, right? They're going to keep having the assets held by the company, and therefore their original investment is going to keep increasing tremendously. They're going to have crazy gains. And in the moment, the only group of people that's going to be out is the people that just invested new money. But as soon as you do another equity raise, that group of people just get that huge value appreciation on their trade. And because the company strategy says, well, we're just going to keep doing this so long as there are buyers, so long as there are people who are interested in doing this trade, we can just keep doing this forever. So that's what MicroStrategy has done with Bitcoin over the last 5 years. And interestingly, it seems that this was done not right to like sucker in people from retail or something like that, because that's not who buys these convertible notes. But what is this? This is saying, okay, this is what we're going to do, and we will have takers on this trade. We will find short institutions that will decide that if they exit right now, actually they'll make a profit on their trade, and they'll get to transform their trade such that other short institutions that want to get out will have to take this deal. Because the company, their assets are too good. They're not dying, right? Ryan Cohen has a cash pile to make sure they're not dying. So each group will keep coming in, and yes, it'll increase, it'll dilute the float, it'll increase the outstanding. It's not technically dilution, it's an accretive offering because it adds value. There is a small group of investors who, by putting their value into the company, it dilutes their value. But as soon as that small group of investors is superseded by another group, their investment comes back up. Right? Okay. So if you can let that play out, right? This is the strategy that Ryan Cohen is taking, and he's doing this specifically to maximize shareholder value. And he's looking at retail, and he's looking at who is stuck with the company for a while and says, okay, now these shorts, now these guys have been in these synthetic positions, have been in these swaps for all these years, they have a decision to make. If they exit now, if they get in earlier, they get to make money. So you incentivize them to exit these positions by saying, well, you can make money. First come, first serve. The more money, the sooner you arrive at the door to pick up these convertible bonds and give the company cash, the sooner you can actually turn this trade profitable. Yes, take it. The sooner you can make this trade profitable. So if that happens, if you do something like MOAS, right, and you just shoot up super, super quickly, well, then people are just going to run for the exits, right? And then it's going to look like a pump and dump, right? You get people holding bags, such and such and such and such. It doesn't look great, right? You end up like not to offend anybody, but you end up with an AMC scenario, right? There have been some hitchbacks there, but by and large, that's a CEO that's not interested in, doesn't seem to be interested in helping out his shareholders, right? Adam Aaron, very different than Ryan Cohen. Adam Aaron is not doing this setup. Adam Aaron could have been doing this the whole time. He could have even met with Ryan Cohen and discussed some of this. Didn't do it. Adam and Aaron raised equity, paid himself, kept taking a salary, hasn't made the company profitable, and the company's just dying. You know, it's being grinded further and further down after that monumental squeeze back in the day, and everybody's stuck holding bags. This way, you go with the slow as, you know, you transfer all of this capital to the company, and then even see, now this isn't also even like a Ponzi scheme thing, because even if you're the last one in, right, you're the last one to take this deal. Well, Brian Cohen has made it clear that he wants to make a company into the next Berkshire Hathaway. That seems to be the case based on this transformation of the investor page. He wants to make GameStop into Gameshire Stopway. The primary goal of this company is to be an investment firm. That is the primary goal. Its primary business strategy is investing. In 30 years, this, you know, 40 years, 50 years, who knows? Who knows how valuable this company could be as Gameshire Stopway, right? Because that cash is not just going to go right. And see, this is where it's different than MicroStrategy. Although, you know, MicroStrategy is the same thing, depending on how big you are into Bitcoin. If you don't believe in Bitcoin and you think Bitcoin is also pump and dump and it's just hype and stuff, I genuinely have no idea. So I'm not, you know, don't misinterpret this as me being a bear on Bitcoin. I genuinely have no idea. You know, if you believe in Bitcoin, then it's the same thing, right? But you know, I don't think Ryan Cohen's intention is just to use this to acquire Bitcoin. Could he acquire some? Yeah, just like Tesla did, right? Tesla picked up $1 billion Bitcoin, you know, a couple years ago, $1 billion in Bitcoin, I should say, several years ago as a treasury reserve asset, and they're up like 4x on that trade. So, you know, could Ryan Cohen do that? Sure, why not? Sure. The idea is to invest. So you want that to take as long as possible, because that's how you transform the company into, oh my gosh, I'm up 2x, let me run for the exits, to I'm up 500x in the past 30 years. Things look good. Let's let it ride, right? That's a much more appealing scenario for me. Like I said, I want to be at that shareholders meeting in Grapevine, Texas with y'all. So. Okay, so I don't know for certain. I haven't asked Richard this directly, but if I had to speculate, I will say that you know, this has to do with some of the things that I just talked about. So the things about the cat errors, the things about possible margin calls, the thing about swaps coming due. Right, Richard is also trying to model what he thinks that Ryan Cohen is going to do as far as these offerings. And so what I think Richard is suggesting here as far as these offerings is when we enter into a period of high volatility and major price action to the upside, I think he suspects that Ryan Cohen is not going to let that run too high, that it'll get up to a certain point, and that when there's super high volume, when there's super high volatility, if we really run up, he's going to do another offering. We will come back down, but we won't come down as far. He's just going to continually, when we have these major volatility events, he's going to do another offering. Now, I think Richard thinks he's going to do another offering then because he's expecting the price to really run up in mid-April, basically into those dates. And so he's anticipating that Ryan Cohen will do an offering whenever we have a major move like that. So part of what it seems Ryan Cohen what will happen as a result of the offering, why it's important to kind of target these and try to get a sense of what Ryan Cohen's cadences are going to be, is so you can flip your position, or you can sell, you know, deeper in the money calls or leaps or something like that, so you can make money off the downside. Because these bonds are going to be shorted every time he does this. The bonds are going to be shorted, and there's going to be upward volatility on the other side. But right, Ryan Cohen, his goal is to maximize shareholder value. Shareholder value is not maximized by, you know, letting the stock run to 80 for a day and then dump. Right. Oh yeah, like family members I talk to about this, like, I don't know what they think, right? I don't know what they think. I try to send them my videos. I have no idea if they watch. like I said, I know my mom watches. I'm not sure she understands anything I say, but she does watch and she does ask questions. You know, and of course I help them. Like my parents, actually, that's the one group of people who do, right? My parents actually trust me on this stuff. That's kind of the only group. But yeah, no, you know, friends, family, otherwise, it's just too. They don't understand what's going on, right? And it's not that same degree of trust, right? It's like, GameStop, okay? Like, you know, when I tell people about that, they're like, okay, and that's working for you? That's working out for you? So, yeah, it is. Sure is. Yeah. Yeah, I try to avoid it. Or like when people ask me, right? Initially, they're like, "So what do you do?" It's like, well, you know, I dabble, I do academic stuff, and I teach some students. And but to support myself, I trade equities and derivatives on the New York Stock Exchange. And they're just like, oh, you know, they like to hear that. But then when you're like, so what do you do? What's your trade? It's like, I only trade GameStop and only like real G's, right? Only like the real ones are just like who also trade are just like. So what do you do there? And I'm like, oh yeah, I do this and I do this and I do this, and I set up, you know, hedge my position and I put cover calls and do this and I target leads and I trade volatility and all that. They're just like, this is actually a good strategy. like there's a guy I go to church with in Poland who worked for a small hedge fund in the Netherlands, and I told him my whole strategy, and he's like, this is a good strategy. It's like, this works. I was like, yeah, and that's good. And you just do the ones, only the one. So yeah, it's like the right. What's the bell curve, right? So it's like to the so my right, but your left. So right here is like the guy who's just like GME go burr, like the ape with the divot in his head, right? Who's just like GME go burr, like only up to the moon. And then in the middle, you have somebody that's just like, oh, it's so speculative. I don't know. It's whatever. And then you go on the other side, and then it's like the Obi-Wan Kenobi, or I guess would be here. You know, the Obi-Wan Kenobi, like 150 IQ individual who's just like, GME go burr. You know? So if you find like genuine people who aren't, you know, people who do finance stuff but aren't like tied into the politics or the performance of finance on the outside, or who do, I don't know, underhanded stuff, then they're just like, nice, dude. Yeah, great timing, man. Seriously, you bought, like I said, we've been talking about the 2 times pre-offering notional asset value floor, 2x book value, essentially 2x cash, because they don't value the underlying business really or anything. As far as swings, like, I don't know. I don't necessarily know to what degree. Like, sometimes I'll sell small portions of the position if I can't sell options on them. You know, kind of scalp like 90 shares or something if I can't get to an even an even number in hundreds, so I can't sell cover call line. It'll just be like like what I did back in January was I just sold higher value farther out cover calls. Like when I realized we were going to the downside, I was like, oh, okay, so let's sell March 30s or whatever it was. I think I sold 30s. Yeah, when we were back up, when we shot up to 29, like almost went back to 30 in late January. I was like, all right. First it was Feb 30s and then March 30s. I picked up some good cash there. But that's risky as you're like, oh, we're getting close. But it's like, nah, we're not done. We're not done. We're going down. So you can do that, right? You can just pull the trigger on kind of a heftier covered call position. That's what I prefer to do, and then just sit on the cash or hold off. You can hold off on cash securities or something. Or go farther out of the money with them. So that's what I prefer to do because, like I said, like if I can be really precise, like I don't have a super precise model for like when we're going to dip and how long. And this is what I'm trying to get with Richard. Richard and I are trying to figure this out because if you can get it really precise, you can flip your position. You can play a delta game, which is work with the work with the underlying, which can get you better returns than selling covered calls. And time it like Roaring Kitty or like Brian Keller. If you can do that, then you'll be more profitable. But if you don't have a good model for targeting that precision, that's the thing is I'm trying to work on it. But like, okay, when I know, right, this week and all of last week, I was like bottom, like, like a penguin out here, clapping my hands, but it's like, but I wish I could see that, like maybe now and I hope, like, I really hope this is what I figured out with the notional asset value floor. This does seem to be the case. And our price action this week, I think, really was indicative of that. I think going forward, whenever we go through an offering, you take whatever the cash value of the company was essentially prior, and then put like a 2x kind of book value on it, figure out what that price is, and then don't re-enter for delta gain until there. Assume that on an offering we're going to get shorted down to there. I guess that's kind of what I'm going with for now. But this will be the first cycle, right? So this cycle we went down there. Now looks like we're going into a new up cycle. The next time we get an offering, I'm going to be holding some cash to make sure that I can, and I will wait. Right? I'll just put in a limit buy. Right, I'll figure out what that cash floor theoretically is on the company, that 2x notional asset value, and I will just put in a limit order to swing a portion of the position to see if I can do that. Either to swing the portion, because swinging a portion of the position also involves figuring out when to exit the top. So I generally on tops, I think I'll still sell covered calls, but I'll take credit from that, and then when I come to, I'll just set that for acquire a notional asset value. So we'll see. But if you entered at the pre-offering notional asset value floor, I suspect you will never see that price again. I think you will never see that price again. Yeah. Just like right when I was buying back in at 1930 or buying back at 18. We've never seen that price again. We will never see that price again. Unless Ryan Cohen makes terrible investments and loses billions for the company, we're never seeing that. Yes, absolutely. Because if you have people playing the wrong game, think about this. Actually, there's this Mark Meldrum. Check out Mark Meldrum. Mark Meldrum just does some great stuff. Mark Meldrum has a great analogy that I really like, right? Wall Street makes most of its money by convincing the world to play basketball on a soccer field. So Wall Street makes most of its money by getting almost everybody who's playing the stock market game to go out and play basketball, when in fact, they're in the middle of a soccer game. What are you going to do if you're in the middle of a soccer game? Every time you go to catch a pass, you foul. So that's how it works, right? And that's, yeah. There are a lot of games being played, and all of this, like, I like GME for me was entry into learning about finance as well. It was not just about this company and about figuring all this out, but it was just like, how does finance happen? Theory of money, theory of value. But I was learning about value too. Like I was learning about the psychology of value. I still love that stuff. Yak concept, archaeology of mind is really great. Learning Thomas Sowell, basic economics. Even basic economics is a fantastic book. Reading Jordan Peterson's, Jordan Peterson's research profile. I don't mean like the self-help books. I mean Maps of Meaning, and I mean his like research portfolio on like affective valence and stuff. Motivation affect, it's like motivational affective perception schemas. Like he has a bunch of work on that. That nobody talks about. That stuff, right? And so when you understand those principles, and then you're like, oh wait, all the calculus stuff that I learned in high school actually matters like a lot. That's how things behave in the real world. Whoa, this is wild. And then you understand that that's how money behaves. and that money is an extension of the human psyche, and that purposefully many people want people to live in unconscious blindness and ignorance for the express purpose of being able to force them into playing a basketball game on a soccer field. I will not, Mr. John Brown. Hey, while I'm in the air, you better not raid Harper's Ferry. Don't let me catch you with any Beecher's Bibles. Thank you. Ooh. Let's see. We got a new Form 4. Is this on the investor page?
Yeah.
Picture.
From my time in Germany, I will
Yeah.
Oh,
Yeah.
okay. Yeah.
All right, let's see. No, thank you. Okay, hey, we got a couple here. Form 4. Okay, so here's Cohen's 13D. Who's this? This is Daniel Moore. But we already knew that. Didn't he already file this like 2 days ago? Oh, this was a report of a proposed sale. Who's this? And this is General Counsel? Yeah. All right, so this is
Yeah.
all right, this is just Daniel Moore and General Counsel Mark Heyman, Robert Mark Heyman. So not super exciting. That's okay. They just officially did their Form 4s. Oh wow.
I could not do that before. Oh, I mean, I could, but I would be asleep.
Nice, yeah. Healthcare is actually doing okay. Hey, way to go, Mrs. Guido.
Yeah. That's what I put in. But the next day,
Yeah, I don't know. When are they gonna come?
With the water, you mean?
it depends on yeah.
I suspect because what's going on with Nat, dude? How does Nat not have GameStop yet? How does Nat Turner not have GameStop yet?
Sometimes I feel like they want to.
What's this, Cosmo?
And I noticed that the
We could, but we kind of already have been doing that. Like we are already down here. Like the thing about opening Monday, like August 5th, was that GameStop just teleported down to slightly below the cash floor. Well, we've been doing that this week. That already happened. That's already been happening this week. I don't know, right? Every time we've really tried to shove below 21, we've just within minutes popped back up. So I don't know what's going on.
What do you want to do?
I mean, I can see from the
But sometimes they have
Yeah, hopefully you made this comment before I did that, because I did do that. Sorry, I got to keep up with the comments here. And then, of course, to this, yeah, it does seem pyramid-y if there wasn't a way to then actually provide shareholder returns on the other side. Right. So that's where actually Brian Cohen investing the money and not just running off with it makes it not a pyramid scheme. If Brian Cohen just was like, all right, now we're going to fold up business and then pocketed just all the equity, like then it would be a pyramid scheme. Yeah, so I guess the thing as far as like I'm not sure the degree to which this ridiculous sell-off has to do with news of tariffs and uncertainty and whatever, right? But I mean, this is major institutions that are driving markets. It's not, what actually when I say options, right? So it starts moving down. And when it starts moving down, the way that the options market is set up, where we have all these puts, right? Everybody is hedging to the downside. Well, as soon as you move down, all of a sudden the puts go in the money. They've got to be hedged, and they're going to be hedged by selling off positions. So as they continue to go into the money, volatility goes up, positions get sold off. You get a crash when you get this sort of cascade that has to do with hedging, right? So there may still be this myth that people are running and calling their brokers and being like, wow, sell everything now. But I don't know. Do people do that still? Stop losses? Do people do that? No, I don't know. I imagine it's primarily institutions driving this stuff. Look at what happened with the JPM collar trade. The roll of that on Monday. So, I think to a large extent, yeah, it is this type of hedging practices that end up causing these types of cascades. And was it that how are the tariffs mechanically causal of a sell-off? Is it companies really think that there's going to be institutions go oh no, this really destroys all of our pricing models? We spent the last several months basically going through all of these companies and basically being well, how much is this going to price them down because the cost of doing business is going to go up? No, they didn't do that, right? They just went, all right, well, this is going to be an event. This is going to be an event that's going to cause some uncertainty. And so we're not actually going to, maybe some people can do the math on figuring that out. Maybe they've been doing that for several months. They have been getting some estimates so that they can know when stuff is going to be undervalued. But I imagine they'd rather do the estimates to figure out stuff coming back in the other direction. What's properly valued and then gets oversold. What are the winners that are picked in advance? I don't know. I'm not an internal insider, but I don't have a good model for why tariffs would make everybody sell everything off. The tariffs themselves do not necessarily make people there's no now there's a 10% tariff on Brazil, so all the rubber sells off proportionate to how much the tariff is going to impact the cost of doing business. Maybe, right? Maybe I'm wrong. Maybe tariffs actually do that. But I would say that the fact that and I guess we have to see, right? Functionally, I was able to predict this type of sell-off by looking at the options market. Based on what I understand about how hedging happens and how options positioning and how market makers work with this, how institutions work with this, suggests that the tariffs themselves are perhaps not the only things in the mix. But again, what about it? Oh, I'm way behind. I'm way behind where Adam Aaron is a dumb idiot.
Yeah. That's okay. Next slide.
As a tourist.
2 to 3, maybe, right? Yeah, because they're 2.5 months up. 2.5 months up, 2.5 months down. So maybe we squeeze in a third one, or they kind of, it's we get 2.5 of them. I think that's kind of it. We get kind of 2.5 of them here. Something like that. You get down, up, down, up. Yeah, you get down, up, with maybe some flatness in there. Not sure.
What's that?
Ladies and gentlemen, for a flight from non-Polish Airlines, if you haven't
My check is already.
and have an electronic booking pass, not your phone or boarding pass printed at home, please engage it at gate B65.
Well, they have a lot. Bitcoin at 40K. Bitcoin at 44 would be great. I think yes. Right? And I think that the reason why they do that as well going forward with these offerings is it's going to this is gonna line up when Ryan Cohen is going to do these offerings, and these offerings are going to play into these cycles as well. Boom, yeah, Johnny has it. Cole, I am not tracking costs super closely, but I would definitely recommend following Otherwise category 42. Otherwise is great. Otherwise has done a lot of really good work on costs, so I would definitely check out costs or check out Otherwise category 42 if you're interested in costs. What's up?
A couple hours.
What's up, man? I would say it's more so about the psychology of value, and then you can, like, a lot that I understand about money has to do with, money is a very highly, what would you say, potentiated abstraction of value. So a lot of my understanding of money stems from my understanding of the psychology of value. So I can make a lot of recommendations about the psychology of value, and then you can infer a lot that has to do with money in that regard.
Thank you.
But if you DM me or leave like a stable comment on the video rather than just in the chat here, I will. I can post that. I can link that. I should probably create like a web page too, which just has some like static resources. Maybe if I do it in like a Substack, because then you can pin stuff. The problem with X is you can't pin stuff. Like any of my old stuff, like nobody goes back and looks at my old stuff because it's like buried. You have to scroll forever to go see older stuff. So I might do that. I have an Academia EDU page. I might move some stuff over there, but that doesn't work out so well. So maybe I'll try it on Substack, and then you guys can like access. You can have better access to that stuff, and I can put a reading list. But I'll for sure do that. Yeah, because I love talking about that stuff too, obviously. Oh yeah, that's right. Nat tweeted today, huh?
Block Polish Airlines is meeting the following passenger, Danchak Oksana, Danchak Andrei North, please proceed to gate B65.
Of course, the top one is Topps cards.
Earlier, I was so tired.
But this is the one, eh?
Now you wait.
Yeah, I'm aware. I feel
Better, right?
calmer. Yeah.
This seems to be about receding hairlines. Like a guy with a sense of humor. Yes. Yeah, so I think I mentioned this in some tweets. Yeah, so the Form 4s are about insider buys from general counsel and from the PFO. So their regular compensation is partially in shares. So they sell a portion of the shares that they receive in order to cover taxes, in order to pay taxes. I think today was probably XRT related because they didn't process Cohen's order as a VWAP. Yesterday, it came in. They dark pooled all of his stuff yesterday when it came in during the day, and then after hours, they just as soon as he filed the form, they bought to close it instantly. Because when he published the form, it made them T+1 settle it, so they had to go buy it immediately because it was filed with the SEC. So the 125 puts are different than the 75s. I don't know what was up with the 125s. Unusual Whales suggested, that it was a short stock arbitrage trade back when it came through, but they would have come through. The 125s I think were different because they were coming through mostly at kind of one sentimental side there. These ones now at 75 and 85, because there are a bunch of 85s that came through yesterday, they keep coming through like on a bunch of different sides. So some are bullish, some are bearish, and some are none side. Let's see. We can even see if we got something. As long as we can get this to and yes, there we go. Oh, they're back. 125s are back. 85s are still doing this. See? There's a bunch of none side voting. This is, look at this. Look at this stuff, dudes. So Unusual Whales says it's a deep in the money short stock arbitrage trade. I don't know, dudes. This is weird. I don't know what this is. Look at this. And so they come in on the none side, and then a bunch of them come in too that are bullish and bearish. Not as many as the none side ones, though. So none side makes me think this is coming in as a qualified contingent trade. But I don't know that we see the volume over on like red straight tie. So I don't really know what's going on. So what is strategic options positioning or something? I forget the title. I'll put that down on the list as well whenever I build this out. I am in Newark Liberty Airport. All right, I will do the. Yes, that's it. Options volatility and pricing by Nattenberg. I've heard a lot. There's another one. I should probably read it first before I recommend it.
Then have your attention, please. Itinerary for your following passengers: Mark Black, Emily.
I would also recommend. I've recommended this before too. Go check out stuff by SpotCamp. Okay. I learned a lot about options from SpotCamp. That's how I figured out. That's how I learned about hedging. That's how I learned about all this stuff. I still haven't even taken their course. They put out a ton of free stuff, and I would ask questions in their. They had Slack. They had Slack for a while, but they're based in Connecticut. But yeah, they have a very expensive. Their program now, I don't think is too much. I mean, they cater to like really pro traders now. But they have a lot of their main guy there, Brent Kachuba, very knowledgeable. I learned how to read Gamma from SpotCamp.
And whose ETA has not been verified by an active register.
Nice, dude.
You will not be rewarded until ETA is verified. Thank you.
I think you can. Yeah. You just have to do extended hours trades, but be careful.
I don't know because
Cheers, man. I'm very happy. I'm very happy to help. Really, right? Because like, you know, if we all just help each other out, we all help each other learn, and we all help each other become stronger and better men for that part, like it makes the world better for all of us, right? If we care about each other, then that helps us all out, you know. So very happy to do it. All right, folks, gentlemen, it is time for me to get on my flight. I am, got some really good news this week regarding my dad. So, you know, I was visiting my dad the past couple of days. He got a very advanced cancer diagnosis, but the oncologists are very optimistic about his condition. I think he's probably a 1% case. He's got a really strong chance of recovering, clear margins after his surgical procedure, no evidence of brain metastases, very limited contamination in the lymph nodes, so he's going to go through a round of chemo and some immunotherapy. So we're all really celebrating that. It's just really very positive in terms of his recovery. So I'm heading back to go see Mrs. Moko in Poland, and continue the adventure from there. So many thanks this week. As always, right, thank you so much for the support. Thank you so much for leaving comments, questions, for joining in on our live stream today. So look forward to seeing you guys. Yeah, with our video on Monday. Have a great weekend, and we'll see you guys then.